Coming up in this show, I'm going to bring you my comments on the markets. Arby has a sample for you of our Future Speak show with a great lesson in cycle analysis on Ethereum. And I'm going to show you our workshop special, how you can learn this analysis style. And then I'm going to bring you a short-term view of the stock market.
Well, I'm going to the city and I'm gonna do a steady show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward to what might happen in coming weeks, and hopefully lots of great ideas and opportunities for you throughout this show. Well, stock market investors got the news they've been waiting for, with indications that inflation was softening, and that brought in some buyers. Last Friday's strong employment report, while the market was closed for Good Friday, brought some early weakness, and then the FOMC minutes, they said a recession coming, that also brought some selling. However, those two downside blips were just really ended quickly, and buyers came back in, and the buyers really were apparent all week until maybe here on Friday as the market is pulling back. Friday started the earnings deluge as banks came out, mostly beating, and those stocks moving up big. That was good news for the financials, and definitely some relief from the recent banking turmoil. And also on Friday, Fred Waller came out and said there's no sign that their policies have had enough effect on inflation, and rates still had to go higher. Early on, that had no visible effect on the stock market, and it opened a little soft, but then the buyers came in again. But then as the market moved up into that thick resistance band that we've been talking about, it then reversed to the downside. And our analysis has shown positive stock market conditions and a likely rally into this time frame. But last week we discussed the potential of a coming range. And S&P 500 moved into the top of that range this week, maybe a few points above it as of Friday morning, but then rejected those levels quickly as it came down hard also off of those levels on Friday morning. And I think that sets up a choppy period ahead as investors start to get the idea that the Fed's actions, they're actually slowing the economy. And that if it does affect inflation, well, that might be good, but it's really going to weigh heavily on earnings. Even though the banking industry, who was expected to report poorly, has beaten other important sectors, are going to have a lot of trouble. And that's going to bring earnings comparisons, I think, that are going to be scary for a lot of investors. And the stock market, as it's moved up to this level, is pretty much fully priced. I'll discuss the range that I think is coming up in just a few moments, and we'll look at those sell points and also some buy points as we enter into this corrective period and what I think will be some very good range trading. For this week, the stock market was narrowly mixed. The Dow Jones and the Russell was a little bit stronger than the other indexes, maybe with some small gains, and the other index some small losses. Bond market down about 2 points. Yields gain about 22 basis points. And we think there may be a little more coming on the upside in yields, but not much. And overall, we think yields are in a downside trend. Gold loses about $12 and showing resistance up at that 2050 area. We thought resistance was at around 2030, 2035, and then it pulled back sharply from there. We think the support area is in around the 1970 to 1940 area, which for us would be a strong buy. Dollar is slightly lower. It broke a key level, however, that we've talked about, and then it put on a small bounce after that, but the dollar is in big trouble. And you've heard us talk about this BRICS attack that's going on. And while it may not send the market into a huge plunge right now, we think that overall the dollar is going to have a lot of trouble for coming years. The big trouble, I think, for this year may be coming out in June or August, so it might edge down a little bit here, then try to get some kind of a rally off of these areas. But then June through August really looks like a problem based on our analysis. Oil very strong, and that really changed based on how OPEC changed things with their cut in production. And for our members, we're going to update those charts over the weekend, and they're going to show a different scenario than we have been showing, which definitely looks like OPEC messed with as far as our work goes. So we'll be updating that for our members as we update those charts. I want you to remember to go to askSlim, take a look at our website, look around. There's a lot to do there. Sign up for level 2 deal. That's really the best place that you can get a good look at all of our videos, especially the Future Speak video that Arby's going to sample shortly. On YouTube, please do subscribe to the channel. Click the notification bell. You'll know when we post videos, and do give us a thumbs up. On Twitter, follow us at askSlim. And if you want to know anything about our specials, memberships, all the content that we show you, the amazing new market condition monitor app, all of that, please write to Matt at askSlim.com. All right, this is a sample of FutureSpeak. Arby just does an amazing job as one of the world's experts in cycle analysis, showing you a positive setup in Ethereum and really teaching cycle analysis as he goes. This is the sample from this week's show of FutureSpeak, and that is available for level 2, 3, and 4 members. Arby, show it to him.
If we go ahead now and shift over to crypto, we will see /ETH, and this is also acting just fine here. Clearly formed that higher low base. Note that we had been seeing this higher low base for many, many weeks, and we were actually calling out this likely important base that was forming. It is really important to look back at those old videos as we were getting out into this late February to early part of March time period, so you can see what those patterns were, because very large opportunities frequently come out of basing cycles. And you can see what has happened in ETH. This is a huge move on the upside of over 500 points here in a very short time period off of this higher low base. And there was a low due, 227.243. And obviously that low did form right on time here. On the weekly. So it's really important for those who are learning this overall process is to focus on that weekly cycle analysis and then really hone in on what you want to see in the short term to prove that a key low has formed on the intermediate term, right? And what happened here on this daily chart was also clear if you're using fibs. So let me show this to you. Okay, so this is that key low. First, I want to highlight the price action. Look at that V low that formed where we had that very sharp sell and very sharp buy that formed the shape of a V. This is very typical to see that kind of price action around a key intermediate term bottom. And then if you're using fibs, as soon as we got through that 78.6 on the upside right here, at 1683.5, it said we had very likely entered into a new short-term rising phase. And given the overall cycle timing on the weekly, that would imply that we had also, in all likelihood, formed a key intermediate term low. So you're seeing how we're using the overall price action and price behavior plus a move through key levels on the upside to tell us what is in all likelihood going on the intermediate term. So in this case, we just ripped to the upside after that, and all in the context of a bull ribbon. We saw flags back to that rising ribbon be bought, and we moved up. So that is really what I wanted to emphasize on this chart is watch the overall price behavior, learn how an underlying behaves as we form its low, and then what key levels are actually violated on the upside that raise the odds, because everything is and has to be odds based, that raise the odds that a key bottom has formed. And from there, how do you structure a trade idea, right? That's how we actually go from chart analysis into trades, right? You have to put structure around the market. And that's what we're trying to really emphasize here in this segment on /ETH. So at this point, what are we looking at? A really swamp cycle right there. Used up this whole cycle rallying, left a short window of time for a pullback. Very good odds we move through new highs here versus that old high at 1955. We also have a firmly uptrending ribbon where pullbacks into that rising ribbon have been bought. Okay, so that is what really needs to be emphasized. A firm upward bias is still in place here in ETH.
That was great work, and you get a great sense for this style of analysis. All right, stock market analysis. But first, you've got to see our workshop. This is the Cycle Analysis Workshop Special. Invest in this invaluable workshop and receive a free month of our Level 3 membership and a free month of our new Market Condition Monitor, a great app. So this would be ideal for people that have not been a member at askSlim before, or free members Level 1, Level 2. You can then get this upgraded month and this look at the Market Condition Monitor. That's a 38% discount. It's only $897 for this unbelievable workshop. The value of this is $1,450. It took me over 2 years to write this, 6 months to produce, and this is just fantastic, as you will get that level 3 in the MCM 1-month membership that is non-recurring, so you won't be billed again. And the cycle analysis workshop is lifetime. That's a 24-hour access to that. So you can watch and rewatch and learn so much. There's so many in there, and it's really connected to so many of our videos that teach around so much of technical analysis. Level 3 and 4 members, you could still save also 38%. It's $500 off the cycle workshop. That's just $797. You want that special link, right to Matt at askSlim.com. This is what is included in here, 23 video modules plus all of those tools for text videos. You can look in here at everything you get, and right to Matt, you can get a demo reel with most of the little clips from most of those videos. Go to askSlim.com to workshops for details. You can sign up there, or write Matt at askSlim.com. All right, stock market. I'm going to give you my short-term analysis. Please do read through this important slide right here, as it gives you very important information about the analysis that we present to you every single time we do these shows. All right, stock market, S&P 500. This is a short-term view in what I believe is a coming range in the stock market. So this is a consolidation, I believe, that's ahead of the bullish market. The reason I call it bullish is because if you watch the special that I put out at the beginning of the year, I talk about the bull market that I expected to come this year. That I believe was a cyclical bull market that lives within a secular bear market. You can get more details about that by watching that. It's free on YouTube, and it's been posted for our members, so it's a two-parter. One came out the end of December, one came out the middle of January, and I think it's just absolutely a great watching, and you'll learn so much about our style of analysis looking at that. You'll see in there the amazing work that we did, and how the markets are very closely following mostly what we said here at the end of the year for so far the first quarter of this year. So I think you'll enjoy watching that if you haven't seen it before. All right, so now, sorry, jumped the gun there. We're going to take a look as we move over into the S&P 500. So this is the S&P 500. And again, we do cycle analysis for those of you that are brand new. On the bottom here are the cycle brackets. Those are our guides to the cycle analysis. And you get a good sense for, excuse me, how there are rhythms in the market. Looking at this, let me just get my arrow here, and you can see right in here that the cycle bottoms are designated by these vertical lines right there. There's another one right here. I didn't put that line in. Let's just grab this right over here so that you can see where that is. I'm just going to move that over. This was where that low was, right over there, pretty much spot on. And then there's another low due right over here. So some of you, or a lot of you, watched last week's show, and I talked about a range coming in the stock market. And I also talked about the fact that I thought the data was coming out and it might get it to pop up a little bit more in here. And it actually lasted a few days longer. Now, what does that mean? Well, that means that you can see in here the minor cycle right in here. It actually was really bullish. It didn't come down very far. This one was more readable. You can see there, here, and here. And this one right in here, well, maybe it was right here, getting this rally right there, and now getting into this corrective period. Now, something changed slightly in here. First of all, you could see it got a little bit above where that resistance was, that 50% retracement, but then failed. It really couldn't hold that very well. And what it leaves here is a shorter period of time for the correction. When you get a powerful upside swamping in what we call a right-hand translation, that's the RH translation, that means that the peak in the cycle is way on the right side. Now, I want you to see, this is a good cycle lesson. You can see here the peak in the cycle was way on the right side here, and then it only corrected for 5 days and then began to move up again. Now, this was unusual in that the peak of that cycle was on the second day, and when it broke that low, well, it set up the decline all through this period right in here. So this is the key. You see here only about 4 or 5 days of the decline right there, 5 days. That's pretty similar to what we're seeing right over here. So what we're looking for is a down week for the stock market next week, and then another move to the upside. Now, the range that we're looking at in here is slightly upgraded, and that is, first of all, when you only have a few days left in here, you could get support here in the slim ribbon. You see that it did that right over here where it got down to the slim ribbon. If you want to get the slim ribbon, it's free. You can write to Matt at askSlim.com and he'll tell you all the ways to get that. This is, it might only come down to the support at 40.64. And overall, the range that we're looking for here in the market, we're just going to upgrade it a little bit right now. 40.25 up to where it made this peak right over here at about 41.65. That pretty much looks like where we're going to be for coming weeks. So our short-term view basically is that it will pull back in here, get support somewhere between the bottom of the slim ribbon, 40.65, and this level here about, we'll call that 40.30 right now. And then after that, get another move back up to test these levels. I don't expect it to be a deficient move like it was back over here. I would expect it to be able to come in here and get up here and test those highs around 41.50-ish again. So a move down over here, 40.65 to about 40.30, and then a move back up over here. That's what we're really looking for the coming, we'll just call it 3 weeks during this period over here. Sorry about that. That makes this area right over here a buy zone and likely to pull down right over here and then be able to get up there and test those levels again. That's it. That's a look at the stock market, the S&P 500, our short-term view. I want you to remember that we have this amazing workshop special going on that you can learn this style of analysis, and I think that you will just be blown away by how different you look at markets. I get a lot of very special emails from people that have taken this workshop and say how it changed their entire way that they look at the markets and how much better that they understand the markets. This is just an amazing opportunity. I've spent I've been a trader now for almost 49 years, around 49 years, and I've spent the last 47 years working on cycle analysis, and it changed my life, and I believe it will change yours in the way that you can use this work, even if you do your own analysis, and how this will overlay the type of analysis that you do. It doesn't mean you'll do anything a lot different. It means you will understand the markets in a very different way, and it will make a big difference for you. So please do consider taking our cycle analysis workshop. That's it. Please do go to askSlim.com and look all around, become a level 2 member on our special on YouTube. Click the notification bell, give us a thumbs up, and please do watch our videos in the playlists. On Twitter, follow us at askSlim, and any questions you have, write to Matt at askSlim.com. I want you to be so unbelievably careful. It is so crazy out there, and I'm always wishing you great trading.
Well, I'm going to the city.